morning, everyone. Thank you for joining us today for our third session, which is hosted by Shearman and Sterling. Today's session is on strategic thinking for fintechs. We'll be covering off regulatory issues that will be of interest in the EA, the UK, and the US. What the purpose of today's discussion will be is to cover off a broad range of topics and to really bring out our panelists and their views. Also, we'll be opening it up for questions and comments from the floor. Either during the sessions, please just put your hand up and we'll get a mic over to you, or towards the end. What I'd like to do today, though, is to really encourage audience participation, because it tends to be that that's where the most interesting things come from, not from myself. So before we do that, I'd like to introduce the panelists for today. So starting at the end, we have Simon Dodds, which I'm happy to join us. He is an Counsel with Shearman and Sterling in London. Simon joined Shearman's after many years of experience at Deutsche Bank, where he was co-general counsel and head of compliance. After which we have Dan Morgan, which is an excellent person to have here as well, as he brings a client focus. Dan is policy lead for Europe at Plaid. Plaid is the world-leading open banking application and platform. It allows its customers, users, to access financial data and to make transactions by using its single API, its global coverage, and its local specialisms. We also have Jen Morton with us today, who's flown in from New York. Jen Morton's a partner at Shearman and Sterling in our financial institutions advisory and financial regulatory practice. Jen heads the broker-dealer practice at Shearman, and she is also an advisor of FinTechs and other types of financial institutions. Myself, my name is Elias. I'm an associate at Shearman and Sterling in London. I work with a range of clients myself, including FinTechs and other types of institutions. So, the topics for conversation today are broad, as I mentioned. I'd like to open the floor today with a discussion, first and foremost, on open banking. What is open banking? It was originally conceived in the UK as a way of encouraging access to established institutions, 9 of which. It's expanded beyond that. It's an API, it's a software. It's also a platform for discussion. What we're also seeing, though, is open banking is moving towards open finance. So given the importance of open banking to Plaid, Dan, why don't you start us off with a discussion of what open banking means to you and also for consumers?
Sure. So first of all, thank you to Shearman and Sterling for inviting me here today. Really appreciate the opportunity. I think you've covered a little bit of what open banking is. Essentially, it's TPPs or third parties getting access to payment account data, and only payment account data, so you can access and share, so through data portability. Through this access, you can aggregate that data to get a better insight, better credit scoring, better for thin credit files, or get a better insight into your financial position. You can also initiate payments by going into your bank account data. You can send a message which pushes that payment directly from your bank account to another bank account, so therefore facilitating account-to-account payments. What does it mean to consumers? Well, I think in the UK so far we've seen greater competition. The number of TPPs has exploded, which has brought more competition to the payments market. I think we're also seeing lower costs. I think we've seen a 500% increase in open banking payments in 2021. I think 26 million individual payments were made. Although that's pretty low, it's a hockey stick growth. And on average, they're 75% cheaper than card payments due to processing fees. So already we're opening up a market, accessing new clients, new participants can come into this market, which is driving down costs through greater competition. And if you break that out to open finance, clearly by breaking down these silos in other data sets, similar trends will occur in greater competition and lower costs.
So we had there a mention of open finance as well, which is really seen as the next phase of the open banking journey. When we look at open finance, we look at the change to the OBIE, which is now the regulator for open banking. What do we need to see, Dan, from a new regulator coming in to really allow open finance to flourish?
So open finance is a very big concept. Open banking is quite a narrow regulatory piece if you look at it from the UK perspective of just access to current accounts or checking accounts in the US language. Open finance could be anything from pensions, investments, a whole range of different financial accounts. We're seeing different approaches in different markets. I know the European Union is introducing the Data Act, which is a horizontal piece of legislation which will then maybe further facilitate open finance. It's not going to come through PSD3. That's clear now. There's moving beyond payments and they're looking at it from a data perspective. In the UK, there's news around what they call smart data through the business department. BEIS is looking at how they introduce legislation here, but we haven't seen any action yet. We've had a paper and some notice that it might come through in the Queen's speech. But again, we've only seen some sort of preliminary white papers on what it might look like, no legislation yet. But what Plaid think should happen globally is copy an approach similar to what we're seeing in Australia with the consumer data right, which is a right that the government can implement from above for a consumer to be able to access and share any type of financial data, sort of beefed up Article 20 from GDPR, if you will, which actually facilitates it rather than just gives a notional right. And then I think the market should help deliver some of that from below. So look at people like Plaid or other intermediaries or other technical service providers who could potentially open up that data, provide that connection layer through their expertise in APIs. So essentially, you're not going to go through a long standardization process in every single sector. I think that's going to take too long, and I don't think that's the way we're going to get to open finance. I think there has to be some movement from the government and regulators, but ultimately the market can help deliver open finance as well. And we're already seeing a lot of examples in the States of what you can do in another environment where the regulation is not as clear, but you can access more data. Obviously, I think you're going to look at liability, governance, access. All these things are going to be key. What happens when things go wrong? Where do you go for redress? Clearly, there are going to be things about where interventions are needed, where data is non-machine readable. So it's more difficult than I'm just saying from the top and bottom. There's things to do, but ultimately, I think that consumer data right from above and letting the market deliver from below will get us some of the way to open finance.
And Dan, do you think you have commitment from government to move in this direction? Is the UK going to lead in this area, or government's just not? It's going to be a more haphazard process.
So we've heard some positive noises around open finance. It was mentioned in the Khalifa review as something that should be supported and a legislation introduced. Obviously, we've seen rumours about some BEIS laying legislation for a smart data piece, which is similar to open finance. But in terms of what comes next, I'm not 100% sure. The FCA paper is now well over a year old in terms of what they thought. It feels like there's a lot of things going on, and this could be in the long grass. What's happening with open banking and the future state, the future entity that came out last week, I don't think that's going to be the route to open finance. It's very much in the open banking mold. How we support better innovations around payments, I think, is going to be clear there, and maybe who steps in to regulate variable recurring payments in a different way, or what comes next there. I think that's what that body or that council is going to look at with the PSR and the CMA and the Treasury. So in terms of how we get to open finance in the UK, that's still all to play for, and I'm not 100% sure that we've got a full commitment to that yet.
Simon, we had Dan mention the Khalifa Report here.
Yeah.
We've had discussions elsewhere in this conference as well. 1 year on, it's a point for reflection and a point to look forward. Do you think Khalifa's gone far enough? If we've seen that implemented, would that be enough to have the fintech environment grow here?
Well, I think to me the issue is not so much whether it goes far enough. I think to me that's the question maybe for tomorrow. The question right now is implementation. And I think when Khalifa came in a year ago, I think it was very well received, generally by the industry. I think a year on, progress has been pretty good. I mean, the panel discussions that we've had here have kind of endorsed the fact that I think as a general matter, the industry is pretty positive. And I'm the sort of person that tends to be a skeptic on government delivery of things, but actually the progress has been pretty decent over the course of a year. and there's a whole bunch of positive examples. The changes to the listing rules, I think, is a good thing, and has been put in place pretty quickly. The setting up of CFIT, there's quite high expectations about CFIT, but at least it's happening. The support for scale-ups, the support for changes to the visas. So all of this, I think, is pretty positive stuff. But always a word of caution. You have to look to the future. You have to keep that implementation going. And whether it's in the open banking space, whether it's the high expectations for CFIT, I think it's something you have to keep watching. And in a year's time, when we're all meeting here again, it would be great to again have a story of decent progress.
Jen, now we've heard from the EU and UK side to a fair deal. What is there to be said for the US in terms of its welcoming or unwelcoming nature and the legal regime that fintechs will be facing?
It's a good question, and it's a pleasure to be here today. So thanks everybody for having me from across the pond. So fintechs are already in the United States, right, in different industries, banking, securities, investment advisory. So it's there, right? And the entry points are there for people, market participants, to come into the United States and engage in that activity and execute their business plans. To the extent you're already not there already. And as part of the FinTech Foundry at Shearman, I'm very involved with that, obviously with the team here and across the pond. We help identify regulatory requirements and licensing issues that you may come across when entering into the FinTech space in the United States. So in the securities industry, which is my industry, it's basically alternative trading systems, like a matching engine, right? Or, in the advisor space, it's the robo-advisor, right? So there is fintech and banking, of course, your apps and your wire transfers and the old school ATM, which is old school fintech. So fintech is there and there are entry points there. I think where it gets tricky is when fintech involves digital assets. The US is currently trying to figure out how to regulate digital assets. The CFTC, which is the principal regulator of commodities and future contracts, have already determined that certain cryptocurrencies like Bitcoin and Ether for now are commodities and regulated in that framework, which is very helpful and it's helped move the ball forward very much in that space. The SEC, which is the principal regulator of the securities industry, which is what I work in daily, is still trying to formulate which digital asset products are securities. And that's been very challenging for them. And they've been applying a very old test called the Howey test based on a US Supreme Court case eons ago. It's very difficult to apply, and they've done that principally in the enforcement setting. So certain ICOs had to be registered, right? And it's been very challenging. We just formed the Gemini Galactic Broker-Dealer, which is authorized to trade in digital assets on their alternative trading system. And that's great. And they're one of 3 or 4 in the space now who are authorized in the United States to do that. So it's very forward-thinking, and it shows that the regulators are willing to engage in this activity and authorize participants to do it. The question is, what do you trade, right? Like without the guidance from the regulator, it's very challenging to advise clients from my perspective and leading my practice to help come up with products that they can change, which their participants can trade in that are beyond the traditional securities products. So, but it's forward thinking, and I think with Biden's executive order a few weeks ago, I think that demonstrates, and it just is evidence to the market that we are serious about having digital assets in the United States and that they're not going away. It's just going to be a little bit of a lift, not only within the government, but also working with other governments like the UK and the CBDC considerations, I think, is a good statement from the United States, but we're trying to get there. So fintechs, there are definitely entry points for fintechs. Fintechs and digital assets, we're getting there. There are platforms that do that. It's just, we're still building the regulatory regime around it.
Simon, did you want to come in there?
Yeah, no, I guess it's an observation, but sort of partly a question. I just wonder, with the fragmentation of the US regulatory setup, plus the weakness of the central government in the sense of, likely, very small congressional majorities likely to go at the
Your words, not mine, Simon.
Is that going to sort of stop the progress towards a coherent regulatory system in the US for a while or not?
It's a good point. I think that at this point, it's coming from the top down, it's coming from Biden. I think people see on both sides of the aisle the purpose of digital assets and cryptocurrency in the market and being a competitor globally with the United States, right? Like we have been at the head of the financial industry together with, Britain and other, Hong Kong, Asia, right? I think what Biden was saying is, we're in this. We want to be a leader in this. We're working towards that, despite the fragmentation in the U.S. government across the aisle. Yeah.
And Simon, perhaps a bit of criticism of the U.S. there, but it's open to discussion here of what the UK is doing to retain its fintechs, because despite all of that discussion, we're seeing many unicorns, many major fintechs developing in the EU, developing in the UK, and moving onwards to a bigger market. What can we see here to actually retain?
Well, I think, yeah, I mean, look, we're involved in a global competition, right? And you know, we heard earlier the representatives of the Australian government talking about what a great place that is for fintech. We have lots of attractions here, whether it's time zone, whether it's the regulatory situation, etc. But you've always got to keep on your game, because the challenge is always there. I think one of the issues I'd highlight, which is, you know, a big topic, I think, for some fintechs, is the question of proportionality. And you hear this in kind of a number of areas. You know, it's not that as the regulatory environment develops in the fintech world or in the crypto world, it's not that fintechs are necessarily against regulation per se, but some sense that they should not be a one-size-fits-all, that they should be treated arguably differently than incumbents, at least for some period. And you hear this debate, you know, sort of across the piece, whether it's in capital requirements for challenger banks or within the operational resilience area where the FCA has been talking a lot. The consumer duty is another area where I don't think fintechs are opposed to the consumer duty. In some ways, it plays to fintech strengths, but some need for regulators to understand the difference between, you know, a long-established financial institution and a new player, and not just simply to react with, you know, to help support newcomers as they move through the process without simply tossing people into enforcement all the time.
And Simon, what's your understanding of the consumer duty there? What does it mean really for fintech?
Oh, I think for fintechs it's kind of interesting, right? And the new consumer duty is trying. I mean, in many ways, it's a positive thing for fintechs. It's trying to improve the customer experience, trying to improve outcomes for consumers. But it does it within a frame which is a more regulated frame than we've had in the past. And it's a frame which does create exposure if something goes wrong and outcomes are not what are expected. Now, I think the challenge for fintechs is twofold. I mean, one is, it's one thing if you're regulated, you have to deal with it as a regulated entity. It's also one of those areas where it's quite easy to be dragged into it because you're part of the manufacture and distribution chain, even if you're not regulated. And one of the challenges for anybody in that space is going to be to develop the compliance processes and procedures that are necessary to ensure that you keep within the rules, and that's always going to be a challenge for fintech.
I think I'm interested to see how it plays out in terms of the ethos and the thinking of policy from the regulators as well. Because if we look back to the competition mandate, which was introduced by the FCA, that had a real impact on the fintech sector. They used digital to drive that competition mandate, and many times we go to the States when I worked for Innovative Finance, and the approach, because they didn't have a competition mandate, was much more adversarial with the sector. And then the FCA was coming along and saying, we'll create a sandbox because we need more competition. We need more competition in retail banking. We need more competition in payments. And policies were developed to try and meet that mandate. And so if you think about consumer duty as well, and better outcomes for consumers, or a better picture of your financial health, better access to your own financial data, it could drive through into other policies, not just now to comply with it, but in what the FCA does to deliver a better consumer outcomes as a whole, and that could be positive for fintech.
Yeah, I agree with that totally. And it's one of those interesting things that, you know, when you look at what the Consumer Duty is trying to do, it's motherhood and apple pie. And the positive aspect is the one you've just described there. With my lawyer hat firmly on, the bit that I worry about is when something goes wrong, the kind of standards expected of financial institutions just goes up significantly and will be very hard to defend against, which is, and that may be, again, interestingly, that may be a challenge for fintechs if they don't have the systems and they haven't invested in compliance in the necessary way. But it's again an example of lots of change going on, and some of it potentially very good.
And Dan, you're sandwiched between two lawyers here, and we've heard a fair bit about the regulatory changes coming through, and I'm sure there's more that we could discuss and we haven't touched on today. How do you at Plaid get ready for that level of development that we're seeing? You know, we have a panel coming up next on this on crypto. They've been redoing their notes, I'm sure, because we've heard from HM Treasury yesterday. What do you do to prepare for that level of development?
I don't know if there's one way that we work. I could tell you some of the things that we are thinking about, what we think is going to impact us over the next year or so in the UK. So the introduction of variable recurring payments is something which we're seeing is going to, so the sweeping has been mandated, which is me-to-me payments from your accounts that you own. Banks have to provide that functionality. But what they don't have to provide is the premium VRPs, which essentially things like replacement of direct debits or card on file type functionality that you can have in e-commerce. And we're trying to think about how we prepare for that market, that commercial market where banks have a lot of pricing power, maybe looking to recoup interchange, and there's no regulation around it. Is the PSR going to come in, and how do we as a company interact there? Do we just stay with the thing which mandated, or do we try and build out a market with banks? So that's something that we're trying to prepare internally for in terms of how we respond. I know a lot of our competitors are. We're also looking to change some processes internally, how we think about that, and using the compliance team on how we respond and change to SCA, Secure Customer Authentication. UK has changed it now where every 90 days the TPP has to re-authenticate, rather than at the bank, which is the initial SCA though. That's going to change processes for us. It's not ideal because the bank doesn't open up all the identity attributes. So we want to make it a good experience for consumers, but we have to change some of that. So that's involved through compliance, it involves outside counsel, it involves everybody to think about how we change that experience for product, to that experience for the end consumer. So things have an impact down on the business and how we respond to change all the time. So there are just a couple of examples that in 2022 we're going to have to make big changes at the business, some positive, some opportunities in how we respond, and it goes throughout.
Jen, on the US side there, I know you mentioned the executive order that's come through. Is there any other guidance that you'd want to flag for the audience today in terms of fintech?
Sure. You know, the SEC would be terrific if they told us which products are digital asset securities. That would be fantastic. That's coming down the pipeline. I mean, the SEC did just propose new amendments to the definition of exchange to include communication protocol systems. And that's a very big description in the release, but it doesn't have a definition, right? And so right now, because of this new proposed release, we're advising a lot of clients, a lot of startups and fintechs on whether or not their platforms will be brought into the definition of exchange and then therefore have to register as an alternative trading system or an exchange. And that's going to really trigger a lot of regulation in the United States for those platforms, not only in the digital asset space, but secondary platforms, those that are currently not regulated. And I think that's just coming from Chair Gensler's perspective of consumer protection, and that could lead possibly to overregulation. So, so guidance on digital asset securities, this definition of a communication protocol system, what that actually means, narrowing it, which I'm convinced that it will be narrowed during the comment process. And also Biden's order, what's going to come out in these reports that he's ordered the agencies and departments to generate for him, and the data points in there. So, yeah.
And a question more broadly for the panelists. What is keeping you up at night these days in terms of the clients you're advising on, or at Plaid, or more generally in the market? What's out there been of concern? I don't know, Simon, if you want to start off.
Well, I think maybe Dan should.
I don't want to put him on the spot. As a review.
I'm happy to go. I mean, I think from my point of view, the increased risk of getting it wrong within the regulatory framework. And let me expand on that a little bit. There's a number of kind of data points you can look at. If you look at sanctions regulation, OFSI, which is the UK the Office of Financial Sanctions Implementation, has fined fintechs, over the last year or so for compliance breaches in the sanctions area. I think, with the war going on and the additional sanctions there, that's likely to be an area they look at. Anti-money laundering is always a problematic area. The FCA has oversight over even unregulated crypto asset companies and have been very critical of the quality of compliance. And then I mentioned operational resilience around cyber in particular, and I think the point in all of these areas is to get it right really requires, even with notions of proportionality, requires an investment in compliance and in legal, which I think is very challenging for fintechs.
Dan, did you want to comment on that?
Yeah, so I mentioned a couple already, so probably jumped the gun on VRP, how we respond to that, as well as SCA, so I'll touch on some others. One thing that's we're watching and monitoring is different European NCA's interpretation of AML around payment initiation. We've seen the Swedish FSA come down with a view for one of our competitors, Trustly, around onboarding end users that have a business relationship, which seems to go against EBA guidance and the new AML package, which has identified a payment initiation as the merchant that you'd onboard. This would effectively make the model around e-commerce and payment initiation very difficult. We've not seen it anywhere else in any other European market. We're confident of the changes coming in with the AML package, but things like this that are interpreted in slightly different ways in different European member states is something you've got to keep an eye on, because it's not a harmonized directive at all. There's different interpretations of this, and when you're trying to go to market across Europe, that can also be a challenge. Something we keep an eye on for as well is the whole thing around data. So there's the Data Act coming in, which is going to have more responsibilities and requirements for a range of different companies in data that they open up and share. How that fits into payments and financial services is unclear at the moment. And that may have a big impact in how we operate and the requirements that are placed upon us. And that's got to work its way through the European Parliament. And then, of course, there's the ongoing piece around cross-border data flows. The new Privacy Shield, if it's going to last. What do SECs mean now in this new world? To some extent, everyone has some view, or the requirements may have to change, and individual DPAs, data protection agencies, are pursuing some more activist agendas than others. So something in an environment where we want an open world of trade, that's a challenge in terms of how we respond to things around data as well.
And Jen?
I mean, for me, I always get the question, how can I not be regulated, right? What do I need to do to modify my business plan so that I don't need to be regulated, under the US securities laws, or not be a broker-dealer or an ATS? And given that the regulatory environment's shifting in the US so much, it's really a balance between achieving business goals, but also ensuring compliance so you don't get in trouble with the regulators. So what keeps me up at night is making sure that I inform the clients and the prospective fintech participants on the regulatory issues, and that when they're coming to a risk decision as to whether or not they want to get the license or modify their business needs, it's really making sure they stay within the four corners to avoid any sort of regulatory scrutiny or potential issues down the pipeline. So it's always a moving target in the United States, especially when it comes to regulation of digital assets. So just keeping abreast on everything, keeping on top of the guidance around the SEC and SROs that are coming out with these pieces of legislation and guidance, but also helping our clients achieve their business goals within that framework. So it's interesting. It keeps me up. It keeps me up at night, but for good reason.
Thanks, Jen. I just wanted to open up to the floor if there were any questions from the audience for our panelists today. And if not, then I just wanted to thank again our panelists that we had. This has been the third event hosted by Shearman Sterling. We're a New York headquartered law firm. We've had 2 of our members here. We have a major presence in London, as well as in Asia, the Middle East, and in South America. We'll be holding a final session on crypto this evening, which I'd recommend you attend as well. We'll all be here for a few more moments if there's anyone who wants to come up to the panelists. We also have a booth on the floor. But otherwise, thank you again to the panelists, and thank you to the audience.
Thank you so much.
Thank you.
Thank you very much.